All right, guys, this is ERJPY, EJ. Yet again, I'm going to start my analysis on a monthly time frame, right? This thing is bullish, right? So if you imagine trying to sell it, right? You know the market is going up, like don't try to counter trade it, man. Just wait for the market to come to you. Don't chase it, right? Because imagine if you're selling it, they dumped it a little bit and we push all the way up to grab your money. You try to sell it again, they dumped it a little bit, you're happy, and then went all the way up again to grab your money. But if you're waiting for the retracement, you buy it, went all the way up, you cash out. Went back down, you went in again because you know that structure. Went all the way up again, you cash out, right? That's how you trade, guys. The market is bullish, look for buyers only, right? Just be patient. The market is bearish, look for sales only, right? So this is EJ. I'm going to grab my key levels right here. I'm going to place one all the way down there. That's a good support level, right? There's one up there as well. Here, right? That's all you have to do in the monthly time frame, right? Just place your levels, right? Try to get as many touches as possible. And then I'm going to place one up there as well, right? The reason you place your key levels on the monthly time frame, because you know for a fact, every time the market goes for one of those lines, it's going to react to it, right? Those lines can be your stop loss. Those lines can be your take profit, right? You know what I mean? So that is why it is very crucial to actually start your analysis on monthly time frame, right? Now we're on the weekly time frame. I'm going to place a couple more lines, right? This is a good support level, right? Reject, 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 reject. Finally went all the way up, created a huge bullish engulfing, came back to retest the line, right? I mean, the support level. Then since then, it's been going up, right? Yet again, it is way too late to buy EJ, and it is extremely risky to sell EJ. The best thing you can do is place your fib, wait for the next structure to be created, and you get in. It's that easy, guys, right? Don't try to sell it. Do not try to sell it, right? Because you might sell it and you're probably going to be in profit for a little bit, then it's going to keep pushing up, right? It's going to hit your stop loss, right? So now we're going to the daily time frame. The daily time frame, that's where you guys going to have to pay the most attention to, right? Obviously, as you guys can see, the market is trending up. If you guys want to, you can actually grab your trend line, right? Place it from the low, right? All the way, you drag it all the way up. Guess what, guys? This is the beautiful trend, right? And you should not be like, why would you be looking for actually? I don't get it sometimes, right? Why would you be looking for sales, man? You know the market is trending up. Like you're going against the market, you're gonna lose every time. I don't care who you are, right? If you go against it, you're gonna lose the trade, right? You might make money, like you might win a couple trade, but in the long term, they're gonna kill you, bro. I've been doing this, like I used to counter trade for the last 2 years, bro. I was in negative, right? You might make profit this week, the next week they will kill you, right? But if you wait for the market to actually come to you, bro, you're chilling, right? You'll make money for sure. So this is the trend. So you guys should be looking for nothing but buys. What's the next thing to do, guys? Help me out. Huh? Structure, exactly, right? So all you have to do is grab your rectangle box right here, right? You got the low, right? Market give you a low, went up to give you a high right here. And like Rika said, right? One of the key indication for you to realize that the market is going to be bullish, if the market fails to go below the previous low, that's a good indication that it's going to go up, because usually if the market is trending down, the market should go below the previous low. See this? Because the low went all the way up to give you a high, and then now the market failed to go below the previous low and to give you a white, guys. This one right? Low, high. High, low. I know it's be confusing sometimes, I know. To give you a high or low, right? And then went all the way up again to give you a what? Very high, and then it dropped all the way down to give you exactly. So the thing is, guys, all those rectangle boxes are key or like entry price you can get in for a buy, right? You just gotta use the fib, right? Let's say if you're looking for a buy, all you gotta do is grab your fib retracement, place it from the most recent low, right, to the most recent high. Then I can guarantee you guys the market should be. Let me zoom in a little bit. Right, see that? The minute it came to the 61.8, right, close above it, and it went all the way up to smash TP1 at 0% and minus 27% as well, right? So that's all you have to do is make sure you actually,
Yeah. See the rectangle to the right.
this one?
This one. The fact that it didn't come to test the trend line, it's not a red flag.
No, not at all. Not at all. The thing is, the trend is just to tell you that you should be looking for buys, right? You don't use the trend as a, obviously, if it does come to the trend line, you can place a buy, you know, but we use the fib in structure to get in, right? You don't use the trend as an entry price to get in, right? You use the fib. If the market comes to the 50 or 61, it does not matter if it goes for the trend or not. As long as it's still above the trend, it is a buy. That makes sense. Right. So let's say if you're looking for a buy, all you got to do is grab your fib retracement, place it from the most recent high low to the most recent high high. Yet again, guess what? The market came to the 50% and pushed all the way up, right? As long as the market doesn't go below the trend and below previous structure, which is the previous high, you still should be looking for buys only, right? And then you just have to keep repeating the same process, to be honest, right? You got this, got the higher high again. Same thing again, guys. Grab your fib, place it from the most recent structure, which is the most recent high low, to the most recent high, and then this will be your entry price. And then we'll go all the way up, guys, to smash TP1, right? TP1 is always going to be 0%. And 0%, that's where the previous high is at. That makes sense, right? And then minus 27%. The reason we use minus 27% is because we know the market is trending up. So the market should definitely give us something higher than this, which is a higher high, right? Because this is a high, went all the way up to give you a higher high right here, right? So this will be 0%, this will be minus 27%, right? And then you just have to keep repeating the same process again, right? This one right here, right? This is a equal higher high, right? And then this as well, right? So all you have to do again, guys, place your fib in the most recent structure right here to this. Guess what? Came to the 61.8% and took off, right? Same thing over and over and over again, man. Like I said before, the minute you get the trend right on a daily time frame, the only reason you can lose the trade is manipulation, right? Or news, or if you're not patient enough, right? Because you know you're looking to get in at the 50 and 61, right? Why would you get it? Why would you get in earlier than that? Right? That, it makes no sense, right? So it went all the way up again to give you a white guys. What do you guys call this? And then I'm pretty sure we made money off that trade, right? But EJ, probably like last month, right? So you grab your fib, place it from the most recent higher low to the most recent high, and guess what, guys? 61.8%, right? 1, 2, 3, and it took off. Right? It took off to smash TP1 at the 0%. And now it is going to minus 27% for TP2, right? So and then the thing is, as soon as the market goes for minus 27%, you should expect the market to retrace, right? And then let me show you guys from here, from the 61.8% all the way to the 0%, that's 500 pips. That's a lot of money, right? Let's say if you take the trade at 0.10 lot size, you would have made $500, right? And if you let's say if you have a big account and you took this trade with 1.0 lot size, you would have made 5K, right? And then your stop loss would have been about, I usually put it like 45, 50 pips below the structure. So right here. So let's say if you're getting at 0.10, you would have been risking $60 to make $500, right? Which is a good R ratio, right? And then this is there we go. So now, guys, let's say the market went all the way up to give you a higher high right here. What would you do next for you to actually get in to place a buy, right? Got the higher low, right? Got the higher high, got the higher low, and then let's say the market goes all the way up to give you a higher high again, right here. And then what would you do to place the trade on EJ?
Flip from the higher low to the most recent structure.
Yeah, exactly. Place it from the most recent higher low right here, right?
Yeah.
All the way down there, and then you wait for the market to exactly. Then for it to drop here,
Yeah.
to create the next higher low, Then as soon as the market drops to the 60 or 50%, give you like, if you touches there and creates the higher low, creates the structure, all you have to do is you place your buy, right? Then you're gonna have to write it all the way again, and so on and so on and so on, right? So I'm just gonna zoom out real quick. All these rectangle boxes, all of that would have been money, right? And this is why I'm actually going to pay a lot of more attention to Japanese pairs, because they trade, I mean, they move nice with the trend, with the structure, with the fib. That's definitely a good pair. That's definitely a good pair to trade for sure. Yeah.
Thank you.
Exactly. That's all we have to do, man. You know, like once you know what you're looking for, all you have to do is sit and wait. You know what I mean? Because you know, if you do sell it, you're going against the trend. You're not better than the market. Why are you trying to trade against it? You know, you going against the market is like you telling, yo, I'm better than the market. You're not better. You know what I mean? Just wait, because if the market been telling you, like, if the market been giving you the same move every time, just wait for the next move to be created, right? That's all you have to do. All right. And that's why we have a good winning ratio, because we're efficient, right? We know what you're looking for. We know we're just looking for the next higher low to be created. Once it does, we get in and we're chilling.